My name is Kevin Sun. My background is in investments and law. On the investment side, I primarily deal with real estate and software SaaS-based companies. And on the law side, this is where I kind of nerd out, is where I really enjoy sustainability law and corporate law. And I think this area has been very fascinating in the way it's been growing. And I think more trends are coming towards the positive way. So today I want to talk about just a brief introduction about Brookfield, the ESG team at Brookfield, our net zero commitment. I want to briefly kind of mention about the BGTF fund, as well as some of the real estate cases that Ron just mentioned. And lastly, I'm going to selflessly promote myself here. I've been writing a legal research paper on the SEC. I just want to kind of go over some of the final points through that. So Brookfield is a global asset manager, over $700 billion under management. We've grown quite significantly. I think when we first started, it was like 100-something billion. So you can imagine Brookfield is kind of taking over, slowly creeping up to Blackstone. That's sort of our competitor. We have 180 operating employees across the world, over 1,000 different investment professionals across different verticals. So when everyone thinks of Brookfield, they think of us as a real estate firm, but we're a lot more than that. We invest across all different verticals, from renewable power, infrastructure, private equity, real estate, and credit. And before I kind of dive into this, I just want to kind of mention my role at ESG at Brookfield. So I'm the coverage person for all of the rating agencies, and as well as the KPIs, and really channel the right message across on how investors and shareholders should see us from an ESG perspective at Brookfield, which is why I've kind of dabbled into all of these different verticals and been exposed to some of the projects across these very interesting industries. Kind of bringing you back to this, whatever you can kind of think of from whether it's renewable power or private equity, Brookfield probably has some kind of arm in it or some kind of investment in it. And, you know, we're pretty much a very contrarian and also traditional investor. However, you know, we do also have a what they call a venture fund, I guess, that was recently created about a few years ago that actually goes after minority stakes in different sort of new niches. I'm happy to kind of talk through that as well. This slide just really kind of goes over what I just talked about. We're really a global investor. We have in our pipeline, it's completely global, and we manage deals all day long. And even though we're a global investor, we like to think of ourselves as a niched market player, which is why we have investment teams across all different verticals and all different regions. And we have expertise, consultants, and anything you name it, we have it in each of these local markets. On the Brookfield Asset Management side is where I sit. We have about 2,300 employees across about 30 plus countries. So that kind of gives you a breadth of what Brookfield covers. So I kind of want to get started by just highlighting some of our initiatives, or we call our highlights from last year. Really two that I really want to focus on. The first one is our commitment to net zero. I think you heard from the colleague from AWS earlier that they're also committed to net zero. I'm sure a lot of other institutions have already committed themselves against this initiative, but we've committed ourselves against the Net Asset Managers Alliance. And there could be other frameworks out there that they're aligned to, but NZAM is our commitment. We've committed about 147 billion of assets of AUM to be net zero by 2030, by which that covers about 2/3 of our Scope 1 and Scope 2 emissions. The second one I want to kind of talk about is our BGTF fund, which we recently raised 15 billion. We closed a few months ago. I think to date, I think it's either the largest or definitely up there, transition fund that's led by Mark Carney. I think many of you probably have heard of his name. I had the pleasure in kind of seeing him across the hall at some point. It was, you know, it was very nice guy. So aside from that, you know, just some relatively high statistics. You know, we're into 8 billion in insurance across green bonds, and we're also very much committed to promoting women and females, you know, representation across the firm, not only at the firm level, but also across our board level. And as you can also see, 39% of our employees comprise of underrepresented ethnicities. And these are some of the metrics that we actually track. So ESG is not a new concept at Brookfield. Throughout all of our investment opportunities, we always try to incorporate ESG principles into our underwriting process. And that starts from the deal process all the way until the exit. And the reason is because we are a long-term holder of assets. We don't really transact as much. And therefore, looking at things like climate, looking at things like physical risks, looking at things like, just within the underwriting process, like, how the company is comprised of is very, very important to us. And of course, we're also aligned against all the, major industry ESG frameworks, including NZAM, TCFD, SASB. We're all of them, PRI as well. And just one thing I really want to try to emphasize here is that sustainability to us, like, from the ESG perspective, is very, very important to us, right? Because we're in so many different verticals and so many different industries. ESG means different things across so many of these verticals. Because, for example, a real estate deal might be interested in the environmental study, but a renewable power might be interested in something else, same as infrastructure. So it means little things, and at least when I was at the investment team looking at software companies, that means something else, right? But across the board, sustainability and ESG, again, is extremely important. I think I briefly mentioned that I'm also the coverage person for all of our rating agencies, and I just kind of put the ESG scores. We are committed to a lot of these major rating agencies, S&P, MSCI, Sustainalytics, and we're definitely in the top of our game when compared to our peers. And we're also invited into the S&P and ESG indexing as well as the MSCI. We're all part of that. So I think rating agencies also agree with us that we're very, very serious about this topic. So now I want to talk about the net zero commitment. Just kind of briefly mention, really this started because Mark Carney came on board and said that, look, if you guys are already doing this, then why don't we just put a stamp on it? And coming from, the COP26 and all the Paris meetings and all this stuff that's been happening, we've decided to announce ourselves a net zero, part of the Net Zero Asset Managers Initiative. And the last time I checked, I think they committed about $62 trillion of global AUM into this initiative to become net zero by 2050 or sooner. And I think that's just a massive amount of assets, if you think about it, to be able to decarbonize. And of course, with that, we're going to do a better job, continue to refine our process, tracking and reporting our GHG emissions across all of our businesses, and as well as publishing decarbonization plans as required by NZAM every 5 years to make sure that we're on target. And also TCFD, which I think probably a lot of people already heard of as well. So here I want to talk about the transition fund. So this is sort of a novelty idea that got started. And I think at first it took some time to kind of scope out what the business plan was and what the business case was, but I think it really made a lot of sense. Because of all of these trillions of dollars aligned against net zero, there has to be a path forward in between what they call the transition period, like the gray period, where you would be able to invest into technologies and things like that could get you there, right? And this slide I thought was super interesting. If you look at the top 10 global emitters of emissions around the world, US and China is the bulk of it, right? And it's so good to see that about 70% of the entire population, if you look at the countries, right, have committed against it. That means that all of these countries, from a policy perspective, government perspective, you name it, are going to start driving towards this goal, right? And that also covers about 70% of the entire global emissions globally. But I think this is very exciting, right? I think everyone knows what's going to happen. Global warming is real, and we have to do something about it. So leveraging that idea, Brookfield started looking at, okay, so what are the things that we can invest in now? And in 10 years, 20 years, we can provide the utmost outcome for our investors and our shareholders. And if you take a look at this, right, so 73% of the current global emissions coming from the energy sector, that is where the bulk of the disruption are going to happen. And like I said before, Brookfield is one of the biggest pure play power, renewable power out there. And I think there's tremendous opportunities for us to grow that particular asset. And in order to meet that goal, we actually have to grow our wind capacity by 11x, and solar needs to rise by 20x. If you think about the amount of capital that needs to be put into this, it's absolutely enormous. And the other question is, do we actually have the technology right now in place to grow? And even if we do, for example, wind farms that gets put in, they look at by hectare, right, by different acres. Do we have technology right now to build maybe mini wind pipes, windmills, so that you can actually generate more power with using less land, right? Those are some of the major questions that get asked. And also carbon capturing technology is kind of growing, sort of this new trend. And BGTF actually invested very recently into a carbon capture technology. And we decided to fund this particular technology because it's just so cool. And if Google carbon capture, what it does is just takes the carbon from the environment and shoots it all underground. Super, super cool technology. And of course, energy storage, clean technology. These are things that we've dabbled before, and Brookfield is not new to these type of technologies and these type of industries, which is why we think it's a great opportunity to invest into early on so that we can capitalize it 10, 15 years down the line. So I want to mention a little bit about our real estate portfolio. So real estate actually comprises about 35% of the global, of our global AUM. And we're very proud of the fact that we were able to attain all these certifications from LEED to Energy to BOMA. All of these certifications really just represent how dedicated we are to improving our buildings. And as well as, because in order to get these certifications, they just don't look at their build. They also look at the water, they look at the energy consumption. In order to meet these criteria is actually quite difficult. We have to put a lot of capital expenditure into these buildings to make sure that we meet and consistently meet these standards. So just give you a few examples, right? So Canary Wharf Estate is 8.5 million square feet in London. It's a beautiful, beautiful buildings there. And we privatized it back in 2015, but 100% of that is electric power since 2012. So the whole complex is run by renewable power. Manhattan West, which we completed about two years ago during the pandemic, during the height of the pandemic, that entire complex is run by 100% renewable power, and it's all powered by our Brookfield renewable team. And it really kind of plays into the fact that we're big enough now to kind of play within our own ecosystem, right? And just to let you know, like, for example, our assets in New York alone, from the hydro plants and the wind farms, in New York alone is actually able to power about 440,000 homes a year in New York alone. One East, which is out in Shanghai, China, there's about 1.6 million square feet of high quality mixed use complex. And we're going through a transition right now where all the roof in that complex, we're going to install solar panels. And there's really two reasons behind it. Number one, we want to reduce the amount of coal usage to reduce the emissions overall. And on top of that, by installing solar panels on the roof, we actually help stop the degradation of the roof, and it actually adds value to the property. So very interesting. And I think phasing out in many years later, we're going to add energy storage into the building as well to really make it into its own sort of powerhouse. And also, lastly, I want to mention Brookfield Property, which is a company under Brookfield Asset Management. They have earned, this is sort of shameless promoting here, but they've earned GRESB's highest rating for 2021 across all of the retail companies, retail malls that we own through Brookfield Properties. So I think probably everyone has heard word about the SEC climate stuff. And this is, I think, to me is interesting, but I think a lot of people find this maybe a little boring. It's very like legal jargons and stuff. So I'll try to kind of keep it as interesting as possible. So before there was that policy that was released earlier, I think last year, 2011, there were a lot of issues about greenwashing, right, by companies, both from the media perspective and also on the case. And this is something that I've been working on to try to understand the background as to why we got here. So the first case I want to kind of just briefly mention is DWS, right, which is the asset management arm of Deutsche Bank. They're being investigated by both the SEC and BaFin in Germany over alleged greenwashing behavior over their bonds and also their sustainability practice. And I think, long story short, is that they claimed that all of their bonds and sustainable products have gone through this what they call proprietary software, but apparently they say that it's not existing. But of course they deny it. So this case is probably going to go to court sometime. BNY Mellon settled for $1.5 million fine from the SEC over the claim that all of their investments in the funds undergo ESG quality review. BNY neither agree nor disagree with the assessment, but just decided to pay with the fine. And then they said that we're going to beef up our compliance. So that's another case in the media. Now, interesting enough, one case that I found very interesting when I was researching this area is the Pennsylvania Carpenters Pension Fund, which Ramirez versus ExxonMobil. And they actually sued ExxonMobil in Texas, and ExxonMobil lost. Their oil company getting sued in Texas and lost. Like, do you know how hard that is to do from a legal perspective? You know, like, and really, I think this one highlights the fact that 10.5B still exists. And for those of you that don't know what 10.5B is, it's really the rule around, you know, proper disclosure, proper, you know, you can't defraud investors. You have to make the right, you know, annual reports, making sure that a lot of things are actually up to par. And what happened in the case of very high level is that they reported two sets of carbon cost numbers. The external cost, they put it at $60 per carbon as mapped to 2030. Internally, they used a $40 number, completely undershooting. Well, also like they were using this to raise capital. They also used the $60 number to raise a $12 billion debt financing fund. But then many, if you guys remember, like a few years ago, when oil crashed, a lot of investors and pension funds lost a ton of money by investing into Exxon. And what do you do when you lose money? You sue, right? That's what you do. And that's how this whole thing got disclosed. And Exxon kept saying that, oh, it's, you know, $40 versus $60 is not a big deal. It's just a matter of opinion. But guess what? The court said, no, you guys are BSing. And we're going to fine you. And very interesting case if you guys want to read about it. The other one is West Virginia versus EPA. I think that made a lot of headlines these days. It's a Supreme Court case that, well, first of all, it's very interesting because there's not many cases from West Virginia. It's not exactly the most, you know, like it's not like in New York or Florida. There's really not many cases going on in West Virginia. So it's very interesting to see that West Virginia is actually the head honcho going after the EPA. So what happened was that that EPA came out with this regulation saying that we need to reduce the mix of our entire energy from 38% to 27% by 2030 in order to meet the target of you know, reducing carbon from the atmosphere and all this stuff, like, you know, like what President Biden just kind of signed in the contract, signed the law, excuse me. And what's interesting was that they were extremely vague on how to get there. And the court relied on, there's a doctrine called the major questions doctrine, which essentially states that if it's something very important that Congress wants an agency to do, but they cannot get, like if there's not much clarity or maybe specification on how to do it, then they can't do it without congressional approval. So what does this really mean in the end? It's a huge implication for net zero because now they really just squeeze EPA's power. EPA now cannot say, okay, I need you to reduce your carbon emissions by 10% by this amount without congressional approval. And as you know, nothing gets past Congress these days because it's completely gridlocked, right? Like, so it's going to take forever. It's really going to take, so it's really interesting. And reading dissent on the people that disagree with this opinion was even more interesting. They're saying that agencies are their spear, right? The executives, that they know all of they're the experts, they know how to implement. Congress' role is just to kind of design these like fluffy laws that they have to take to execute. But because of this, now it shoots back to Congress and they have to agree on what the next best thing forward is. It's probably never going to happen. So very interesting case to keep watch. I won't mention too much about like the whole SEC climate disclosure stuff. I think everyone already knows about the disclosure against 1, 2, and 3. There's some exceptions if you're a small business against scope 3, excuse me, where you don't have to disclose. There's also some assurances over the qualitative and quantitative information exposed, but that goes through the whole audit process in the company. And scope 3 is a black box, right? And the SEC knows this. And they even said within the legal language saying that they want to promote companies to report on scope 3, but they also acknowledge the difficulty in the process. But really the key takeaway is that if you report it and you do a reasonable job to kind of back it, we won't sue you, we won't come after you for now. So let's see. So what now, right? So SEC received over 5,000 different comments from various different channels. I thought KPMG did a really good job kind of like aggregating all this stuff together. And what they found was that the concept itself was very favorable. So that's interesting. Only 21% had negative responses and 12% was very, very sort of unsupportive of this. Scope 1 and 2, about 42% was silent on the issue. Scope 3 only got about 11% support. So that's also pretty interesting. In terms of assurance, the majority were pretty silent about the issue. It looks like just going to go through that, the auditing process. And TCFD, the majority supports going through disclosures through TCFD. And in terms of reporting time frame, more than half wants to push out the effective date, which is I believe they say something like 2023, 2024, depending on the size of your company. So what does this really mean? It means that SEC could do the two things. They could take all these comments and then kind of reiterate the next thing and then kind of go back and forth, or they could just do nothing. They've done that in the past. They just did nothing, right? So with that, I'll turn it over.